control what we've got to control. Our destiny is in our hands. And in tough times, there are opportunities, but there are also a lot of things that we need to do as business. Since Mr. Nanda talked about a lot of the processes and the broader picture, I'd stick to a few practical things that I would probably follow in my own business when I look at. If you think that banks are not hit by tough times, think again. They are very much a part of the same business fabric that all of you exist in. And just like businesses have to watch out when times are tough, so do banks. Yeah? So I'm going to talk about few simple philosophies that I would follow when times go tough, so that we can see what we can do. I divide them broadly into three parts. I divide them into what I call as things that you do as far as business is concerned, things that you do as finance, and lastly, a few other things, including opportunities that take to build. I've not got a presentation, I'm just going to talk to you guys about it. Okay? Firstly, I don't know what the mix between manufacturing and services are, but typically when an environment slows down, as he said, sales slow down. Now, beyond a point, you can't increase. So one of the first things that even large companies, you've seen a Tata, you've seen Maruti do it, is cut down production. Produce as much as you can sell, right? If you're in the services business, you've got to see how you can cut down capacity. One of the first things that I'd say that when you look at your businesses is produce as much as you can sell. Because if you produce more than you sell, then it sits in your inventory. And like he said, why do you want to pay banks a high rate of interest, right? And sit in your inventory. I don't know how many of you read the Economic Times today, but there's a very interesting pull-out in the CD dossier that talks about what do you do in squeeze times. And it talks about Maruti as an example. By cutting down 2 days of production, they have saved an enormous amount of cost. On cost of production, including simple things like electricity, running machines, labor, etc. Second, more importantly, they have cut down on inventory. So I'm saying produce as much as you can sell and be very brutal about your production line. Second, be brutal about your inventory management, because therein lies an enormous amount of hidden costs. There are several parts to the inventory costs. A is a simple financing cost. B is the price volatility cost. See, we are living in a moving world, right? There is a price that keeps changing. There is a currency that keeps changing. There is a lot of risk in terms of the pure price volatility of your inventory. Manage your inventory. There are enough ways to do that, and I'm sure there are many consultants who can advise you on this, on just-in-time management. But simple way is manage your supply chain. Try and get in as much material as you can hold. Try and reduce your finished goods. Cut the price and sell your finished goods. Do it as a discount, but don't sit on large inventories. One of the things in tough times is keep moving your inventory so as to get your money in. Keep moving the cycle. Inventory leads to debtors. Toughest thing that's happening in the industry today, including very large companies. You talk to a Larsen & Toubro, you talk to a Maruti, you talk to any companies. What is the biggest problem facing the industry today? Collections. Money is not coming. Governments are not paying. Large companies are squeezing vendor chains. It is just coming down the line. So in tough times, as in easy times, brutal focus on collections. Get cash into the company. Offer discounts if you're getting cash, but get cash into the company so as to keep your engine moving. Very important in tough times to focus on collection, and some of the largest companies today, so I can imagine all of you must be facing it too, are facing collection pressure. And that collection pressure leads to a cycle pressure, increase in your working capital and increase in cost. So brutal focus, I'm saying produce as much as you can sell, try to keep your inventory light, and focus brutally as far as collections are concerned. Some of you may import. I'm now talking about manufacturing. I'll broadly cover services as well. try to see if you can develop local sourcing. Because at 64 rupees to the dollar, it makes you very uncompetitive, and it is very difficult to pass on costs in the market. Very easy to say, I will try and pass on to my customer, but the customer ain't buying. The customer is getting pinched by various costs. So try to develop outsourcing strategies, try to localize some of your raw materials in case any of you are following the import leg of the, let's say, just one. Sorry. A lot of you work with people, a lot of you work with labor. One of the things in such times is really saying, how can you reduce your headcount while you are adding to strategic headcount that he talked about? Temporary labor, contract labor, things like these. How can you address your costs of labor, just like you talked about inventory, at times like these? If you're in the service industry and running excess capacity, number of seats, how can you rationalize it? How can you use it for other ways in terms of utilization of capacities? Even in manufacturing, if your capacity is not utilized, can you do contract manufacturing for someone else? In other words, try to use every aspect of what's in your business so that your capacity is utilized and these costs are spread over a larger revenue base of customers. With the rupee depreciation, exports become very attractive. In fact, one of the things that India stands today, and I don't think we've even begun exploiting this, is at 63, 64 rupees to a dollar, we become very competitive in the world. Whether it's against a China, whether it's against a Brazil, whether it's against an Indonesia or a Taiwan. And one of the first areas that has started experiencing that is apparel exports. Orders are just gushing in. I expect that to extend to as many segments as possible. So one of the things that I would say is try to diversify. Now you would say, how can I try and get exports? There are many export houses, global export houses in India as well, who you can work with, who you can try and see and offer your products. But try and diversify at times like this into the export market that can act as a natural hedge for this thing. Times like these, very important to be close to your critical customers. Because if you are going through pain, your customers are going through pain, right? Try and be as close to your critical customers. Call on your customers often. Try and see what you can work out with them for several reasons. You are in your business because of your customers. If they are going through pain and they try and see if they can source from someone else, that will be an issue with you. And together try and see how you can push. So customers are very important, and at this time you must work with your critical customers and you must work with your critical supply chain at times like these. So on the business side, I'm saying focus on doing everything that can keep you in business, that can help you rationalize cost, that can help you diversify and keeps the criticality of your business. Let me just turn to finance, right? It plays a very important role in businesses, particularly in small and medium businesses. Finance is the backbone. Even in large businesses, finances make or mar businesses. And hence, what can you do in this area in times like these that can help you better? Firstly, be liquid. What do I mean by that? I think it can mean different things for different businesses. It depends upon the criticality of your business. I'll give you an example. In the aviation industry, airline industry, the single most critical factor is aviation turbine fuel. All good airlines keep 15 days value of aviation turbine fuel in fixed deposits with the bank. Because if they can't pay for their turbine fuel, their business shuts down. It is mission critical for their business. Now that may be relevant to that. Each one of you may have some mission critical. So when I say be liquid, you would ask me, how liquid? That depends upon your business. But anything that is mission critical, if in your business it is important to pay salaries, labor is more important, raw material is more important, XYZ is more important, be liquid to the extent that you can. That is critical to make sure that if things really get bad, you have sufficient liquidity to take care of your businesses till things settle down. Don't keep open risks. We talked about the currency. Even small businesses have foreign currency, can have exports, can have imports. If you are importing, please hedge your risks. If you are exporting, just view and then decide whether you're hedging or keep it open. You're all in the business of making money out of business and not out of finance. A lot of people will come and tell you, oh, do this exotic structure, do that thing. My friend who's a foreign exchange expert who's going to go on next, I don't think he's going to sell you any of these products, but people come and talk about a lot of things. I can say, hedge your currency 1.5 to 2 times of total liabilities. What I mean by total liabilities is your bank plus creditors, whatever you have to pay out. Try not to exceed 1 to 1.5 times ideally. Debt should never be more than 1. At times like these, try and keep your leverage low. Some of you can raise equity, great. Equity can come in the form of unsecured loans from some of your friends, relatives, etc. Or equity can come in the form of equity, but keep your leverage manageable because it can kill firms. And if you survive this tough phase, I can tell you India will happen. I'll talk about a little bit about things. Few other points, times like these, brutal focus on cost. Every penny, that's what the article today in the ET talked about. Maruti says we focus on every penny, conveyance, transportation, travel, lodging, small things you don't realize, but they eat into your cost. So go into depth on and be extremely hands-on as far as costs are concerned. Many people don't realize, but they have non-core elements to their business. It could be some machinery lying around. It could be some extra land that you have bought. It may be a business you started but really did not go anywhere. Sell your non-core businesses or assets in times like these to be able to protect and grow your core businesses. There is another opportunity. By selling these non-core and getting cash, you can acquire other businesses. There is a saying in the M&A world, you go out and buy when there is blood on the streets. And I can tell you that this is a time when there is really blood on the streets. But for doing that, you got to be efficient with your own finances, and you could sell some of your non-core assets and businesses to be able to use the opportunity, or just be liquid to wait for an opportunity. So sale of non-core assets could be one area that you could sort of, be really focused on as we say. I think there was a discussion about processes. But I think the focus on processes, really the end result should be productivity. Productivity, more productivity means leading to better cost. What do I mean by productivity? Getting more for the same, in very simple words. So if you're getting X production and X cost, can I get at a lower cost the same production? Or if I'm reducing my production, reduce further cost. So each area of business or every area of sales, purchase, collections, you should examine to say, how can I focus on processes such that it increases productivity? Productivity leads to saving costs, and better cost means better margins. Yeah? Control near-term stress, but don't forget the long term. See, when things hit you, when you talk today, what is hitting us? Slow growth, collections are slow, currency is hitting us, liquidity tightness is hitting us, interest rates are hitting us, lack of availability of materials, everything is hitting you. So don't get, it's now's and near, right? You have to focus on surviving, but you also need to have a longer term strategy. I'm not going to elaborate because I think that's already been discussed, but look for opportunities in times like these when you look at your long term strategy. Take equity, I already talked about that. So broadly, in times like these, and I think you're going to see this for the next 6 to 8 months. The way I see the Indian economy unfold, I'll just spend 2 minutes on it. I think growth is down to 5%. The way it is looking, it is very well possible that FY14 growth can even slip below 5%. Right? If government holds back the spending to meet its fiscal deficit targets, private sector is not investing anything, Investments from overseas have slowed down, and if the infra projects don't get moving in terms of government action, growth could very well go below 5%. Yeah? So you are going to go through a next tough 6 to 9 months, and we are getting into an election year. So any action you can see possibly is a few months after election. So which means virtually 12 months from today is when you're going to look for some positive action and hoping things don't worsen from here. You are going to have a currency that's volatile. You are going to have a short-term interest rate that is going to be higher. Cost of money has gone up. You are going to see significant slowdown as the wheels grind down. So I think we can expect that this is likely to last for the next 6 months. So anything that we do, we must have a plan while we look at it monthly, must say, assuming I have to live in this for the next 12 months, what will I do in 1 month, 3 months, 6 months, 12 months? Plot your business, plot your cash flows, and make sure, like I said, be liquid and focus on productivity. I just wanted to share with you a more practical aspect of doing business. This is what I can assure you I do in the bank as well. We are focusing on each one of the aspects apart, including being liquid, focusing on cost, productivity, processes, and I think the more businesses do this, the better as you manage through this. And let me tell you, businesses who survive in this phase typically go on when the turn happens, really get prepared. If you pepper in some of the stuff that was talked previously, maybe add to some talent, maybe look at the other opportunities. I think the opportunities will come. Medium term, India is extremely attractive. We talk to global investors all the time. I'll take a minute to tell you. They're basically saying we'd like to invest when we see volatility reduce. If the currency moves from 58 to 64, how do I know it's not going to 70? I'd bring my money in when I know that there is a certainty to the currency. So I think medium term, India is attractive. Valuations on, if you look at the stock markets, are at all-time attractive low for certain segments, right? So I think India will happen, but there is pain before there will be gain. Thank you very much, and I'm happy to answer any questions.